Again, to folks signing on, we'll wait just another minute here, about just a minute or two past the hour, we'll get started. Give folks the benefit of the doubt with our new remote world. All right, well, it is a couple minutes past now. I can see the audience is filling up fairly well. Why don't we go ahead and get started? We are recording this for everyone's information. So good morning again, everyone, and thank you for joining us. My name is Tim Sampson. I'm the chair of the Business Law Group at Downs Racklin Martin. I'm joined today by three of my partners. Scott Jonick is a business lawyer who specializes in commercial real estate. Scott's been our point person on the CARES Act since before its enactment. Mary Parent is a business lawyer with a general corporate practice. Mary has led the development of our COVID resources webpage since we launched it in mid-March. And John Maitland is a labor and employment lawyer who's been fielding many CARES Act and FFCRA questions over the past several months. We've got a PowerPoint presentation that Scott and Mary will speak from. The presentation is fairly long, so we do plan to send a PDF of it to all the participants here, and we'll post it on our website as well for future reference. A couple other housekeeping matters before we get started. If you have questions during the presentation, please use the Q&A button on the bottom of your screen to ask them. Please don't use the chat feature for this. I will try to keep up with the Q&As as we go, and we will have pauses during the presentation and save time at the end to address questions. But again, please ask them in the Q&A feature rather than the chat feature. As I mentioned, we are recording the webinar here on May 28th and plan to post a link to it on our website for future reference as well. And of course, you can expect our disclaimer. This is not legal advice being offered through this webinar. It reflects our professional understanding of the matters reported as of today. But the application of what we present to anyone's particular circumstances is beyond what we're able to accomplish here. If you're interested in pursuing today's discussion as it may further apply to you, obviously we welcome you to reach out to any one of us. Finally, again, it bears underscoring this information is subject to being updated at almost any time. We've been following the CARES Act very closely since before it was enacted, and what anyone who's been doing that can tell you is this: there is more guidance to come. We monitor the activity daily and provide updates on our website as soon as we can after that information rolls in. So please stay in touch and make sure you're understanding what the latest information is. So with that, I will turn the presentation over to Scott John. Scott.
Thank you, Tim. Go ahead, John. We can hit the next slide. There we go. As Tim indicated, the PPP, the Paycheck Protection Program, is subject to almost daily change. Last night, the SBA revised one of their frequently asked questions, which is one of the sources of guidance, to update the date of the safe harbor for those companies returning funds. That was moved to May 18th. That was just to reflect a decision that had been enacted several weeks ago. Also today, Congress continues to discuss amendments to the PPP, principally the House. The Senate last week approved a bill to change the 8-week period to, I believe it was 16 weeks. The House today is looking at 24 weeks. They're voting by proxy. So we're anticipating changes on the 8-week provision, on the 75% payroll cost requirement that we'll discuss later in this presentation, as well as the deductibility of the PPP loans cost. As those matters are utilizing funds, the question becomes, are those deductible from your income taxes? And that's an open topic. So with the caveat that all of this may change, let's go ahead with what the rules are today in an effort to maximize your forgiveness. As you may recall, funds started rolling on April 3rd. Tomorrow is actually 8 weeks to the day. So those companies that received funds on the first day, tomorrow will hit 8 weeks. So the PPP provides funds that are expended over the covered period, the 8-week period, and they'll be 100% forgivable if you expend all of those loan funds on qualifying payroll costs, qualifying non-payroll costs. If there are no workforce reductions or wage reductions over that 8 period, and so long as 75% or more of the proceeds are used on payroll rather than non-payroll, you can have 100% of that loan eligible for forgiveness. So I'm going to move through this slide quickly. As I said, there are 2 costs in play. One is payroll, one is non-payroll. The question is, what are payroll costs? The essence of this is it is wages, tips, salaries, compensation. It includes group health benefits, retirement benefits, family leave, and the payment of state and local taxes. The rules are a little bit different for independent contractors and sole proprietors, but it's a pretty broad definition of payroll. What is excluded from your payroll calculation? Persons whose principal place of residence is outside of the United States are not eligible for use of the funds. Compensation for employees in excess of $100,000 is not considered under the program. Benefits received under the FFCRA for sick and family leave wages don't count for purposes of other group benefits that would be included in payroll costs. And there is no forgiveness for self-employed individuals, including independent contractors and sole proprietors and general partners. And we'll get into some of those carve-outs that make the program a little unique for those businesses later in the presentation. There has been a frequent question about whether bonuses are allowed as payroll costs. When the application form for forgiveness was released by the SBA, it suggested that bonuses would be approved up to the $100,000 limit. The rule that was released on the 22nd has now confirmed, yes, bonuses are eligible as a payroll cost. So too is hazard pay up to the limit of the prorated $100,000 threshold, so $15,385. Also included or eligible to be included in payroll costs are compensations that are paid to furloughed employees. If there was anybody who was furloughed, benefits were carried, but they weren't being paid, you can now go back and pay those persons comp and include it in payroll. That may prove beneficial to you as we get to the 75% payroll, 25% non-payroll allocation. Go ahead, John. So non-payroll costs that are allowed to be included in your forgiveness application include utilities, electricity, gas, water, a general term, transportation, and telephone and internet access. All of those service commitments had to be in place prior to February 15th. So, no new services that were started once the program began, but anything in place would be included. Netflix, Westlaw, probably not included within the definition of internet, although that's not clear under the guidance. Questions too about transportation. Gas is certainly included for corporate vehicles. The application that was released by SBA for the first time has included lease payments and business rents for personal property that was in force before February 15th. That's going to enable businesses to include copy lease charges, for example, for copiers, perhaps fleet vehicle leasing for personal property. This was a very expansive modification of the program that was just recently released, and it's worth looking into to the extent you have leases on personal property used in your business. So the treatment for payroll costs and non-payroll costs are similar. The statute, the CARES Act itself, refers to the phrase incurred and paid. So when you take the loan amount, you're allowed to use it for those payroll and non-payroll costs that are incurred and paid. As the SBA has implemented the program, it has morphed into incurred or paid, and I'll discuss that a little bit further. But for payrolls, significantly, the 8-week period no longer is constrained to starting on the day of your loan disbursement, the first day you received funds. The SBA now allows for payroll costs only an alternative payroll period, which you can select as the borrower for purposes of your forgiveness application, and that would begin on the first day of the first pay period following the initial loan disbursement. So if your loan was funded on May 1st, you had a paycheck period that began on May 8th, you could use May 8th and the subsequent 8 weeks for your forgiveness period, for your covered period for purposes of payroll costs. This means you don't have to restructure your payroll to bring it within the broadest scope of the program. Go ahead, John. So as I said, if we have loan proceeds on April 20th, first day of the pay period is April 26th, we can select April 26th to June 20th, eliminating the biweekly payroll modification. So go ahead, John, please. So incurred or paid, the SBA has determined payroll costs are paid on the day that paychecks are distributed or on the date that the ACH credit transaction is originated for payroll purposes. And payroll costs are incurred on the day that the employee's pay is earned. So what the SBA has recently done is they have allowed payroll costs that are incurred but not paid to be eligible for forgiveness so long as they're paid on or before the next regular payroll date. So what this does is it opens up perhaps 9 weeks of coverage for forgivable loans instead of 8, because if your first paycheck covers the period prior to your start and you're allowed to extend your pay period for those costs incurred, you end up with more than 8 weeks of coverage. So this is one of the self-employed individual traps that I mentioned at the start of the program. The new rules indicate that for owner employees and self-employed individuals, including independent contractors, the compensation under payroll cannot exceed the lesser of the $15,385, which is a $100,000 cap prorated for 8 weeks, or 8/52 of the 2019 compensation. So if it's the lesser of, and the business had a subpar 2019 financial period, let's say it was a new business and didn't have a full year of returns or hadn't maximized its growth yet, the lesser amount could curtail your eligibility for forgiveness for those owner employees and self-employed individuals. Go ahead, John. For non-payroll costs, we don't have the flexibility that we had for payroll to adopt an alternative payroll period. For non-payroll costs, the covered period is 8 weeks beginning on the loan disbursement. However, the effect is similar in that we are allowed to seek forgiveness for those expenses paid during the covered period, which is the 8 weeks, or for those expenses incurred during the covered period and paid before the next billing date. So it's an either or, it's not an and, as was originally intended in the statute. So little greater flexibility for the borrower. This is that same independent contractor, self-employed dilemma. The way the rules have been implemented by SBA, forgiveness for independent contractors and the self-employed is tied to the lesser of 8 weeks of profit or the $15,385. If they had a sub 2019, that's going to hurt them. The other carve out is retirement plan contributions and healthcare premiums are not eligible for their forgiveness. It is purely financial income as reported on wage tax returns. So I'm moving through this quickly. As Tim said, we will be providing the slides to program participants, so they are dense. But let's take a break here for any questions on payroll or non-payroll costs before we move on.
Okay, Scott, thanks. So segment one, a couple questions have come in related to this. And the first, Scott, are federal income tax withholdings, Medicare and Social Security, part of the payroll costs that would be included in the forgiveness amount? I think,
no,
or a different way.
Taxes aren't.
Taxes aren't, but the question may be, is it gross payroll or net?
Yeah, it's a gross, but it does not, only state and local taxes get included, not federal.
Okay, here's another one then that has to do with the incurred and paid or incurred or paid. The loan is received on the 1st of May, but paychecks go on the 1st and the 16th of the month.
Mm-hmm.
Can the funds be used for the previous 2 weeks from the 1st to the 16th because the payroll is incurred during that time?
Yeah, technically the answer is yes, and it's not because they were incurred, it's because they were paid. So if you pay it and it's for the prior 2-week pay period, you get the benefit of those 2 weeks. And then your last 2 weeks may not yet have been paid, but they are incurred. So as long as they're paid before the next, or not before the next, but on the next pay period, you can extend that 8 weeks as I suggested because they're incurred or paid. So first look at those expenses that were paid and then calculate those expenses that are incurred and paid at the next payroll period.
How about unemployment insurance payments, FICA and FUTA? I believe they're clearly included, right?
Yes, correct.
And then dental costs with respect to healthcare?
Yeah, group healthcare. There is not conclusive guidance. There is no determinative interpretation. What the guidance refers to is group health benefits. Yes, I think dental, vision, all comes under the group health policy. So.
And the slide we put up earlier and moved through quickly, but we'll again have posted for folks' reference later, does go into those inclusions in greater detail. There's a couple other questions that may be helpful. I think you touched on this, but it may be worth emphasizing. I know you touched on it. It is worth emphasizing is whether extra wage payments count toward forgiveness calculations. For instance, the bonus situation, as I do think there was some uncertainty about that here until very recently.
Yeah, that's correct. Until very recently, that has been one of the significant questions. The answer is yes, except for perhaps independent contractors and sole proprietors. Bonuses are allowed under the forgiveness calculation. So too is hazard pay, which has expressly been allowed by the SBA. And as I mentioned, employment benefits, wages that are paid to furloughed employees are eligible. So up to the 15,385 limit.
Right. And here's a question that may be more, in John's wheelhouse related to employee benefit plans and which components of employee benefits are eligible for forgiveness. We know health is. How about life, disability, dental, employer HSA contributions, benefit administration fees for COBRA, wellness platform fees, and that kind of thing? John, do you have a sense of how that would fall into some of this?
Not specifically. I mean, I had thought that those costs probably would not be included, but Scott, you may know more specifically.
Yeah, the rules speak generally to retirement benefits or group health benefits, so they don't get into the specifics of which are allowed. The general premise among those who have been interpreting the act to date has been, if they're a group benefit provided to all and they fall under a retirement benefit, or if they fall under a group health benefit, then they should be allowed costs. I say should because we can't answer that conclusively.
And then final question for this segment, how about employee stock ownership plan contributions, Scott? Are those considered retirement contributions that would be included in the forgiveness calculations?
Yeah, again, we don't have conclusive guidance, but the general consensus has been yes, ESOP plans are included under retirement benefits and would be allowed.
Great, so why don't we move back then to the second segment of the presentation and we'll continue to go forward.
Great. So, we've talked about payroll and non-payroll costs. Now I want to talk about as the application for forgiveness is pulled together, there are three so-called reduction factors that may reduce the amount of your eligible forgiveness. And I'll take them in turn, but the three topics that we're going to cover are the 75% payroll, 25% non-payroll allocation, any reductions of any individual employee's compensation, and a workforce reduction, which is an employee count rather than an individual reduction. So we'll talk about each of those in greater detail in the next section here. SBA has determined, although it's not in the CARES Act, that 75% or more of the loan proceeds for which forgiveness is sought must be spent on payroll costs rather than non-payroll costs. So one question that had lingered was, if you don't hit 75% with your payroll costs, are you going to be eligible for forgiveness at all? That is, does it work a reduction or is it a threshold for eligibility? The SBA has recently determined that it works a reduction. So if you fall short of 75% of payroll, you are still eligible for forgiveness, but your amount will be reduced. So we'll go through a calculation here. If you're short of 75%, here's how you determine what is eligible. In our example, we have payroll costs of $70,000 in the covered period. We have non-payroll costs of $30,000, meaning 30%. So we're short of 75%. To cure it, according to the SBA guidance, all of the payroll costs will be eligible for forgiveness. So we start with our 70,000 and we multiply that by 75% or 0.75 to determine what our maximum amount of eligible forgiveness will be. In this case, based on 70,000, we get 93,333. And if we back the 70,000 in wages out, that means we have 23,333 in non-payroll cost eligibility. So I hope that's explanatory. As I said, the slides will be made available so you can walk through it. The second reduction is a compensation reduction. This is on a per employee basis. There's actually a schedule in the SBA application for forgiveness where each employee is identified and compensation rates are established. It's a dollar for dollar reduction for any wage or salary for any employee that is reduced in excess of 25%. So borrowers are allowed a 25% reduction, but beyond that, it will limit your eligibility for forgiveness. And I'll explain that in the next couple slides. Go ahead, John. So to compare comp for purposes of the reduction, we look at the last completed quarter, which will be January 1st through March 31st of 2020. And we compare their average weekly rate or wage to the average weekly rate or wage that was paid over the 8-week covered period. Again, we're talking payroll, so it might be the 8 weeks beginning on disbursement date or at your election, the alternative payroll period. So I'll just refer to it as the covered period. So again, as I mentioned at the beginning, comp over 100,000 is not eligible. So we're looking at those employees making less than 100,000. So the reduction for each employee based on the formula, which is provided in the application, is 8 weeks worth of the difference, the wage difference in excess of 25% is the simplest way to say it. Go ahead, John. I'll give you an example here. So if a borrower, excuse me, if an employer borrower reduces a full-time employee's weekly salary from $1,000 a week during the reference period, meaning January 1st through March 31st, first quarter, to $700 per week during the covered period. And they're still on a full-time basis, so this is purely a wage reduction. There is a $300 a week reduction. The first 25% is forgiven. So there is a $50 delta between the $250 a week, which is forgiven, and the $300 delta. So we take the $50 weekly reduction, multiply that by the 8 weeks of the covered period, and for that employee, you would have to attribute a $400 limit or reduction to your eligible forgiveness. And you'd have to do that analysis for each employee who had wages reduced by in excess of 25%. So this is a significant change that was just released in the new SBA interim rules and with the application. The May 22nd rule confirms that there's not a double penalty. So if there is a reduction in the number of hours that an employee works that is not commensurate with a separate rate reduction, the FTE gets reduced, so there will be a reduction, but there is not a penalty under the 25% wage reduction. And I'll give you the example to make that more plain. If an employee is working a 40-hour work week and making $10 an hour, they would be making $400 a week. If the employer directs the employee to work part-time, half-time, so they're only working 20 hours a week, but they continue to earn $10 an hour, they have $200 a week in wages, which would be a 50% reduction, but it is not counted for the wage reduction purposes because it's a FTE reduction, not a wage reduction. So you don't get double penalized. So as I said in the last point here, borrower still has an FTE reduction, and there is a reduction for that, which we'll discuss now. Workforce reduction is measured by FTEs, full-time equivalent employees. And the question has been persistent. How do we calculate what an FTE is? And the SBA has now answered that. It's based on a 40-hour work week. So you can't have an FTE greater than 1. So anybody working 40 hours a week gets a 1.0 calculation. Anybody working part-time is going to be a percentage of that carried out to a 10th. So a half-time, 20 hours a week would be a 0.5. So if there is a reduction in FTEs for the entire workforce of that borrower during the 8-week period, as measured against that first quarter, there's a percentage reduction. And that's going to apply not only to the payroll side, but also non-payroll costs. So the percentage reduction will impact the total amount of forgiveness. Go ahead, John. So as I said, based on FTEs, to determine an FTE, the employer again has the option of choosing the period which most benefits that employer. So it could be your weekly average from January 1st of this year to February 29th, this year being a leap year. Or you can go back to last year and look at your number of FTEs from February 15th to June 30th. It would behoove a borrower to consider their FTE calculations for both of those periods to maximize their benefits. One may be greater than the other, and it's your election. Seasonal employees can use either of those time periods or any 12-week period between May 1st and September 15th. SBA has recognized that seasonal employers have different needs, and the 8-week period may not be commensurate with their peak workforce. So again, they're trying to promote some flexibility. So questions have persisted, and I keep coming back to that. What if an employee leaves? What if an employee voluntarily has left the job, feared COVID, is making more money on unemployment and won't come back? The rules as they are established today say employees will not work an FTE reduction, therefore they won't reduce your amount of forgiveness. If an employee refuses a written offer to return, if they voluntarily resign, if they're fired for cause, or if the employee voluntarily requested and received a reduction in hours. So Mary will get into this a little bit later, but if those apply, document them. So the written refusal to return, you need to make a written offer, and there has to be an acknowledgement that the offer has been refused. Under the new rules that were put out on May 22nd, the employer is now charged with informing the state unemployment insurance office if an employee has rejected and offered reemployment within 30 days. It's not clear how that's going to be enforced. But it is a rule. They're going to be looking for that in your documentation. If you have employers that are not on your payroll list, you're going to have to be able to explain that. And I think one of the criteria is going to be that you have reported it. The SBA has indicated they will tell us further how we're supposed to do that. Right now, there's not guidance on how to report it. So to calculate FTE for the workforce reduction, the calculation is laid out in the application. As I said, it's based on 40 hours per week. We're going to divide that by 40 and round to the 10th. So a full-time 40-hour employee is 1, can't be greater than 1. If they're working 20 hours a week, they're going to be a 0.5 or some range in between that. The SBA allows the borrower to elect what they call a simplified method, where you can assign a 1 to full-time 40-hour-a-week employees and 0.5 to any employee working fewer than 40. That may be advantageous if you have a number of 0.2, 0.3 employees, and it can work a disadvantage if you've got number of 0.7, 0.8. So just recognize there is an option to assign a 0.5 to all part-time employees, and you can determine which is more beneficial for you. So let's take a break there and we can talk about any questions. You're on mute, Tim. There you go.
Thank you. Thanks, Scott. Okay, so questions are rolling in. I'm going to do my best to grab ones that are relevant to that segment, and we'll circle back at the end and do our best to answer questions we haven't got to yet. Definitely want to save time for our next segment as well. Scott, one of the categories of question about employee retention, or I guess it's really in the category of the full-time equivalency, both before and after, has to do with employees that leave for reasons other than COVID-related furloughs or what have you, right? So in one instance, there's someone's terminated for cause. In another instance, someone retires, and in another instance, someone leaves but is replaced by someone else, different person. So you got a net your population, your FTE equivalency is the same, but you've got different individuals before and after.
The SBA excuses the borrower if an employee leaves for reasons beyond the borrower's control. So if an employee dies, if an employee retires, those persons are not going to work a reduction in your calculation. That was established under the new interim rule that was issued on May 22nd. So, I think the general premise is, to the extent there is a valid justification for why an employee may not be present on the payroll at the end of the period or during the period, document it and move on. They don't count for the FTE reduction.
Thanks. So a couple other than relating back to some of the earlier segments on payroll and non-payroll costs before we move on. A few questions related around the subject of accrued payroll elements like profit sharing and 401k contributions that are made not on a regular basis, or maybe regular, but certainly not on a regular paycheck basis, so that they're made annually or semi-annually. How would you handle that for loan forgiveness purposes?
It's not clear, and there is not concrete guidance on how to do that. I think the answer that I would espouse is, if it is a general group benefit and it is paid, if there are, let's say, 2 payments a year, I would prorate it over the 8 weeks and take the benefit of that 8-week period on a prorated basis, and then document it. I think, the answer here, and Mary's going to get into the documentation, much of this is going to rely upon the level of the documentation that the borrower has to submit for forgiveness. And to the extent you can do so and explain why you're doing what you're doing, I think, as I've indicated, the SBA has been pretty flexible so far on how this is going to happen. So again, it's going to be the lender approval of your forgiveness, not the SBA, but I think under the rules, there is reason to claim a prorated 8-week portion of those costs, such as retirement benefits.
Great. Okay, with that, again, let's turn to Mary Parent and her segment of the presentation. Again, we'll circle back with more questions here as they roll in at the end.
Okay, good morning, everybody. The first topic I'm going to talk about is relief from reductions, or as you may have heard them called, safe harbors. And just to reiterate a point that Scott just made, under the May 22nd rules, the SBA has made it very clear that any employee who is fired for cause, voluntarily resigns, or voluntarily requests a schedule reduction will not be counted for the fewer employees test. Next slide. Okay, the CARES Act has what we call a savings provision, or a safe harbor. And this basically allows businesses that conducted layoffs or furloughs or any salary reductions for employees between February 15th, 2020 and April 26th, 2020, what I'm going to call the reduction window, to receive the full amount of forgiveness to which they would otherwise be entitled, so long as any reduction in FTEs that occurs during that window is fully restored by June 30th, 2020, to at least the number of employees that you had employed on February 15th, or the reduction in your average annual salary or hourly wage for each employee compared to that period, February 15th, has been restored by June 30th, 2020. It's important to note that any reductions, either in employees or salaries, after April 26th cannot be saved. This is consistent with the expectation that PPP funds will be used to preserve employment and compensation for employees. Like the reduction, the safe harbor is considered on an employee-by-employee basis. Notably, and we'll talk a little bit more about the loan forgiveness application in a minute, it contains separate worksheets for employers to determine if they qualify for those so-called safe harbors. So in other words, you can qualify for one safe harbor or the other, or in some instances, both. Okay, the next topic that I'm going to talk about is documentation that you need to ensure maximum forgiveness of your PPP loan. As Scott has said, documentation is key here. If you haven't already started assembling documentation, and we'll talk about what that documentation is, you certainly should be doing that as soon as possible, especially for those of you who are further along in your covered period. But as you would expect, the CARES Act requires you to provide documentation verifying that you've used all of your funds on eligible expenses. But beyond providing information to the SBA, it's important to note that you're also required to retain certain documentation for a period of time after you've paid back the loan or the loan has been forgiven. The application contains a list of the specific documents that you should provide with the application or retain starting on page 10. And I would encourage you all to look at that. It's very detailed. Very important note, as I mentioned, any documents related to your PPP loan must be retained for 6 years after it's forgiven or repaid in full. And this is basically because the SBA reserves the right to come in and look at those files during that 6-year period. Okay, now let's talk about specific documentation. First, I'm going to talk about payroll documentation. Under the current rules, we know that payroll counts for 75% of the forgiveness. And so it's important to have a full set of records here. First, you need to have either bank account statements showing salaries that you've paid, or if you use a third-party payroll service provider, their reports. And these should be for each and every employee for whom you would like to have forgiveness. Together with that, you need to provide with your forgiveness application tax forms, or again, if you use a payroll service, reports from that service, showing your payroll tax filings reported both on the federal level, that's typically using Form 941, and then as well on the state level, so state quarterly business and employee wage reporting, unemployment insurance tax filings, the documentation that you would provide for most of you on the webinar today to the state of Vermont or state of New Hampshire. And then finally, the last category under payroll documentation is payment receipts, canceled checks, account statements, anything you have evidencing any contributions that you as an employer made to an employee benefit plan, so health insurance and retirement plans. Next slide, thanks. Okay, then FTE documentation, and this is a little bit repetitive of what Scott said. He talked about how you calculate your FTEs, and depending on the method that you used, you need to have documentation supporting it. So you either need documentation showing the average number of FTEs you had on payroll per month you employed between February 15th, 2019 and June 30th, 2019, between January 1, 2020 or February 29th, 2020, or if you're a seasonal employer, either one of those two time frames, or again, you can pick any consecutive 12-week period between May 1st, 2019 and September 15th, 2019. The next category accounts for 25% of your loan forgiveness. This is the non-payroll documentation. For the most part, I'm going to focus on 3 categories: mortgages, leases, and utility payments. For mortgages, you need to provide with your forgiveness application a copy of your lender amortization schedule, receipts or canceled checks showing that you actually made the payments, or you could also submit a lender account statement, or statements, I should say, from February 2020 to 1 month after the end of the covered period. And those statements need to verify the interest amounts and the payments. For leases, and again, these cover personal and real property, a copy of your current lease agreement, and again, receipts or canceled checks verifying that you've actually made the payments. Or you can use account statements, as I said before, for that period from February 2020 to 1 month after the end of your 8-week covered period. Last, for utility payments, you need to provide copies of your invoices from February 2020, as well as any that you paid during the covered period, together with receipts, canceled checks, or again, account statements verifying that you made those payments. Note, with all of these categories, if you incurred the expense during the covered period, so long as you paid it on the next regular billing date, you can still submit that and be reimbursed for the expense that was incurred during the covered period. Next slide. Okay, the next category is documents that you should retain, but you don't actually need to submit with your loan forgiveness application. And many of these are documents that you use to make some of the calculations. So first, this one's a little bit hard without having the loan forgiveness application in front of you, but there's a Schedule A worksheet on that application. And you use that Schedule A worksheet. It's got some tables, and you complete them to show your number of FTEs. So the first table is called Schedule A Worksheet Table 1. And that's the table that you use to list out all of your employees with an identifying number and noting any salary or hourly wage reduction during your covered period. You fill in all that information there, and it's used to count. This is for employees who are making less than $100,000 a year. Then you need to have documentation supporting the listing of any employees that you list in Worksheet Table 2. Those employees are the employees who received in any single pay period in 2019 compensation at a rate of more than $100,000. So 2 tables, one for under $100,000, one for over. Any information you use to assemble that, you should retain for the 6-year period. Then again, I know there's been a lot of questions about this. Any documentation you have regarding employee job offers and refusals, please, please, please make sure that you're getting those refusals and your offers are in writing. Firings for cause, voluntary resignations, and written requests by any employee for reductions in work schedule. And I'll just mention again that requirement that Scott flagged that came out on May 22nd, that you need to inform your state unemployment insurance office of any employee's rejected offer of reemployment within 30 days. The final category of documents to retain, but that you do not need to submit with your application, is documentation supporting the PPP Schedule A worksheet FTE reduction safe harbor. So this is one of the 2 safe harbors. The first safe harbor is covered in the tables you do on employees. That's the wage reduction. This is the reduction in FTE employee levels. So any documentation that you have showing how many employees you had on February 15th and ending on April 26th, and showing that you've restored those levels of employees back to that February 15th, 2020 level. Okay, the last major topic I'll cover today is what the process is once you submit your loan forgiveness application. And this week I've gotten a question from a lot of folks, and it's unfortunately one that we can't answer today. And that's the question, when do I have to submit my loan forgiveness application? I'm getting to the end of my 8-week period. How long do I have? Well, the answer to that is, to date, the SBA has not provided guidance as to when you must submit the loan forgiveness application. Next slide. The good news is the May 22nd guidance did give us some information about what happens once you submit your loan forgiveness application. So you complete your loan forgiveness application, you assemble all the documentation, and then you submit it to your lender, not to the SBA, but to your lender. Your lender then has 60 days from the date you submit the application to review the application and determine whether you qualify for forgiveness. And again, this is a lender decision as to whether you qualify for forgiveness. The lender then issues a decision to the SBA as to how much the lender thinks should be forgiven of your loan and requests that they be reimbursed that forgiven amount. Then the SBA has 90 days to consider your application. And if it determines that the lender's decision was correct, it will remit the amount to the lender plus any interest that was accrued thereon, and your lender will inform you of the amount forgiven. Not the SBA. This news comes from your lender directly. Next slide. Okay, so a lot is being left up to the lender and then the SBA. So what do you do if your lender or the SBA decides that your loan shouldn't be forgiven or that a portion of your loan should not be forgiven? Well, the first answer to that is if any portion of your loan's not forgiven, then those amounts must be repaid within 2 years with interest at 1%. That's the rule as of today. There has been lots of talk about perhaps extending the repayment deadline from 2 years, but as of now, that has not happened. Note, the SBA has been very clear. If it determines in its review that you were ineligible for the PPP loan from the beginning, the loan is just not going to be eligible for forgiveness. So if you get the bad news that a portion or all of your loan's not forgiven, what can you do? Is there an appeal process? Well, unfortunately, as of today, the SBA has not provided a process for appeal. But the good news is on May 22nd, they did indicate that they will issue a separate interim final rule addressing the process. Very quickly, I just wanted to touch again on something that Scott mentioned earlier, tax effects. So any forgiven loan amount is going to be excluded from your gross income for tax purposes as non-taxable canceled indebtedness. This is part of the CARES Act. It's giving you a break. Typically, a forgiven loan would be taxable. However, note that as of today, any expenses you paid for with your forgiven funds may not be deducted. The IRS came out and said, we're not going to allow folks to double dip. You're already paying those expenses with tax-free funds. We do expect that there'll be some legislation on that. It's been discussed, but as of today, that's the rule. I'm just going to gloss over quickly because I see there's a lot of questions, but here's some things that you can be doing now. As I've said, start assembling your documentation now. Make sure you're calculating your payroll costs. You have a sense of where you are in that 75-25% calculation. I'm not going to go through all of these, John, but the last thing I'll say is just keep in close touch with your lender and see where they are on their understanding on the forgiveness application. They're a great resource for any questions you might have. And that's it.
Great, thank you, Mary. So got quite a few questions piling up. I've gone through them. I'll try to get through them as quickly as possible and try to summarize where I can. So if hopefully we will hit your topic and cover that. If not, word for word, the question you posed. I think here's some low-hanging fruit. Dental costs, Scott, are those included in your payroll costs? You're muted, I think.
All right. Yes, it is believed dental costs are included in group health.
How about HSA contributions?
I believe so. Yes.
Okay. Here's a question, Mary, on documentation. How best to document payroll costs incurred but not yet paid at the end of the period?
I think, again, you would just, when you actually pay them, provide those pay stubs. So in other words, you'll have some time to be collecting those before you submit your forgiveness application.
I think so.
And if you really needed to, you could show timesheets.
Mm-hmm.
how about payroll to employee owners of S corporations? Included as payroll costs, Scott?
Included, yes, but they don't get the benefit of the healthcare, I believe.
Do you want to clarify that?
Let me take a look. Yes, owner, shareholder of an S corp, wages are included. This is going to fall under that lesser rule where it's going to be the lesser amount of $15,385, which is tied to the 100,000, or 8/52 of their 2019 compensation. So it's conceivable they're going to be penalized if their income was lower in 2019 than in 2020. But yes, wages would count.
And what happens then in the event that 2019 was a negative year for that corporation?
We'll have to see. The way the rule has been implemented by SBA, it's the lesser of those two amounts. If they had negative income, they're going to be penalized.
We talked earlier about the payroll, whether it was gross or net, and it may have been too simply stated by me. The question is whether it's gross before or after the cafeteria deductions like medical insurance and 401k. And I think the answer is it depends on whether those particular deductions are themselves qualifying payroll costs.
Yeah, generally it's a gross calculation, but yes, we need to look at the specifics on the cafeteria draw.
Mary, at the end of the day, if a borrower received more than the SBA will forgive, can that amount be paid back right away, the excess amount be paid back right away without incurring interest?
Yes, I believe so. Isn't there a 6-month window before interest starts accruing, Scott?
Yes, there's a deferral of 6 months.
So you have time, in other words, at least 6 months to submit your application, know that part of it is not going to be forgiven, and then take care of that. If that process extends beyond 6 months, interest would begin to accrue.
Correct,
Okay.
at the 1% rate.
Yeah, I would want to double check that. I think the 6-month forgiveness is a deferral period on payment, but I think the interest continues to run during that 6 months.
Does it? Okay.
Okay. Scott, in a lease, rent, how about common area maintenance expenses in a lease? Are those part of the forgivable lease cost?
It's an interesting question. My interpretation is, yes, it is part of rent, and rent is included as our lease payments. So I think common area charges are part of the rent that is being paid and should be an allowable expense. Unfortunately, the SBA hasn't provided clear guidance. And that's a topic that has been widely discussed, and there are some people who disagree. But yes, I think it is intended to be a lease cost and should be reimbursable or forgivable.
And as we touched on, utility costs are independently as well in the event that
Correct.
At least they're part of your common area maintenance, perhaps.
Yep.
How about in a general partnership that pays for health insurance for the general partners? Are those forgivable?
I do not believe they are. Yeah, they are not. Health benefits are not eligible for general partners or independent sole proprietors or independent contractors.
So like the S corporation example before, payroll would not include the health insurance.
Yeah, S corp is a little bit different than an independent contractor because an S corp owner is still an employee, so their wages are paid differently and their qualification for the benefits are different. An independent contractor, the SBA has discussed it in their interim language on the guidance, isn't necessarily being taxed on those benefits. So again, to avoid double dipping, they don't allow it.
Okay, if the PPP loan is used solely for payroll, right? So that the 75-25% rule doesn't come into effect. It's 100% payroll. Can the entire thing be forgivable? I think the easy answer is yes. The 75%
Yeah, absolutely. Yeah,
is a
75-25 isn't a rule that says 75% must be payroll. It's you must spend at least 75% on payroll. So anything beyond that is still forgivable.
How about the intersection of the EIDL grants in particular, I think, with the PPP is what this question is touching on. A borrower receives both the PPP proceeds as well as the EIDL grant. I believe my understanding is that on the form, there's a box to check that you received the grant, and that's going to come off the top in effect and not be forgivable.
Yeah, I don't know, Mary, if you want to touch that, but under the interim rule that was issued on May 22nd, there were two interim rules. One dealt principally with the borrower, one dealt principally with the lender. But the interim rules established that the SBA would be withholding that EIDL amount from the money when it's refunded to the lender prior to passing it back to you as the amount of forgiveness.
So you can't, so I think in other words, you can't have both that $10,000, whatever the amount was, is not going to be both forgiven and given as a grant.
Correct. Yeah, you get the grant, it's produced, it's taken out of your amount of forgiveness, and the SBA will work that automatically.
So here's a good question on with respect to those earning more than $100,000 annually. Is their full compensation ignored in these calculations, or just the amount in excess of $100,000?
It's just the comp in excess of $100,000 that doesn't apply.
Here's an interesting comment too about a borrower's bank reported that forgiveness was based on hiring back the same employees. And I think that we have, seen several instances along the way over the past weeks and now months that, we can all be forgiven for having, uncertain information at any particular time. And it may have been that information was provided during one of those periods. I think it's clear now that is not the rule.
Agreed.
And then here another, how will the SBA handle forgiveness where employees are part-time? In this instance, the borrower's employees work 20 hours a week. Does it make that impossible to get the loan forgiven? And the answer to that is no. You have to use the calculation to create a full-time equivalent level so that you compare those on a 40-hour week basis, and you come up with, in that instance, I guess it would be a 0.5 FTE. You add up your FTE equivalents, during the covered period and your look back period, and see if they're the same, and if so, you're still in the 100% forgivable category. And again, another event of, we've touched on these before, employee leaving. Here, it's an employee applying for medical leave for a non-COVID related event. How does that affect the calculation?
Well, I guess the key issue is going to be whether it's a paid leave or not a paid leave, because lots of different ways you can have a medical event. And you'd get into FMLA issues as well. But I think for purposes of the PPP, you would really focus on the pay component. To the extent it's unpaid and we're worried that has an impact, I think there was at least some general guidance, but not very specific guidance as to whether that would be an excludable event or not. And so I think we're probably still waiting to hear more from the SBA as to whether that's excluded, if any portion of that was unpaid.
How about, here's a general question about including owner employees in these calculations. I think the answer is yes.
Yeah, it's similar to the owner of the S Corp that we talked about earlier, where they're an employee. They get the benefit of the wage health calculation as well as payroll. So yeah, they're in a little different category than the independent contractor, the sole proprietor.
Here's a good question. Does the number of employees on the loan application need to match the FTE on the forgiveness application? I think the answer is it does not need to match it. And in fact, all of this is a reflection of the understanding that employment decisions and effects events change all the time. And so what you applied for, what you anticipated when you applied, could well have changed in the intervening period. And that's why these calculations are done to determine whether those events affect your level of forgiveness.
Yeah, I think you're right. The application does lay out, as Mary said, the 2 tables on Schedule A. And it really is necessary to walk through those tables with each employee to establish your FTE equivalent. The number of employees at the time of your application and the number of employees at the time of your application for forgiveness may well be different. And as we discussed, a reduction in that number may affect or limit your amount of forgiveness, but it may be an excused amount. So if somebody left for a reason that's excusable and you've documented it, it may not hurt your eligibility for forgiveness. And similarly, if you have a reduced employment count, but as Mary talked about, if you qualify for the safe harbor and bring people back on June 30th or prior to June 30th, that dip is excused for FTE purposes. So my best advice is to walk through the application, but in short answer to the question, no, the numbers don't have to match.
And related somewhat is a question about whether the PPP reduction is based on a percentage of FTE going down, and I think the answer is yes. It's not on a one-to-one basis. It's going to be a percentage comparison before and after. And again, to Scott's point a second ago, that's why and that will be revealed, I should say, as you get into the loan forgiveness application. Yep. And it walks through that.
Yeah, I mean, at the broadest general example, if you started with 5 employees and now you have 4, you've got a 20% reduction in your FTE, presuming they're all full-time. So you're going to have a 20% reduction applied to your eligible amount of forgiveness. It's the simplest math.
Yeah. Hey, Tim, I see a question in the chat relating to creating this situation that Congress created with the unemployment and sort of the incentive of people wanting to go on unemployment to tap into that extra $600 a week. And I think that's one of the reasons the SBA probably came back and said, you know, that you need to let the department know, because there are situations where employees have an incentive to go on unemployment. They will make more than they will if they work. But it will have an impact on your PPP forgiveness, and that's why it's important to bring them, have them come back. And both the Department of Labor in Vermont has made it very clear that employees will not be receiving unemployment if they have been invited back and are refusing to come back. So I think that's why they also have the specific they added the specific requirement that you have to notify the department. So I just wanted to emphasize that again, because it will have an impact on your forgiveness.
Yeah, John, let me just reiterate too. I opened with the fact that Congress is still looking at some of these requirements. One of the topics that's on the table with the next round of stimulus money may be, rather than paying for unemployment, the stimulus money will be available to those persons who come off of unemployment and return to the workforce. So, yeah, nothing is determined yet, but it's on the table.
Yeah. And sort of following up on that, I think part of the question was also related to, that we're not looking at, you don't necessarily have to retain the exact same people all of the time, right? It can be, we're just looking at FTE. So if there's a net neutral situation, then it wouldn't impact your forgiveness. The real key is that you have the same FTE from at beginning and end, right?
That's correct. I mean, there were questions in the restaurant world. If you fire a waiter, or if a waiter leaves, restaurants close, but you bring people back and they're painting and refurbishing, it's a different job. Does that count? Yes, it doesn't matter what the job is. It's just one full-time employee, one part-time employee. Assess your FTEs and assess your wages, and that's correct. Could be a different person at a different job.
Here's a question about if during the covered period, the 8-week period, right, the borrower received revenue from another source that could cover wages during the period, is the loan still forgivable? And I think the answer is yes. There's no, there's nothing that touches that in the loan application or the guidance I've seen. What it actually, Scott, I think harkens back to is the certification you made at the beginning of the application process. Did you really need the money. And if the, if it is money that came in from another source after you made the application, I'm not aware of any requirement you have to stop using your PPP funds and use your other source.
I think that's right. I think there is the opportunity for audit. The SBA has established a further safe harbor, and we haven't discussed it here, but loans that are 2 million or less are presumed to have made the certification, the necessity certification you mentioned, in good faith. So if it's a loan that's below 2 million, I would be a little less concerned about continuing eligibility. If there was a larger business that took a loan in excess of 2 million and during the period came into alternative revenue sources, and it was prior to the May 18th safe harbor date for repayment, that's something I would want to look at a little more carefully. But yes, I think you're right. The certification was made at the time of the original loan application, and there is no express requirement anywhere to continually updating it or to represent that that warranty is made throughout the term of the loan. So
there's a question, Mary, that relates to record keeping in a broad sense, but it refers to the, I think, the use of multiple internal accounts for payroll and the PPP, and whether there are rules that would govern, I guess, which accounts must be used for those purposes. And I'm not aware that there are those rules. It is just going to make, the more your PPP loans get commingled, the higher the challenge will be to explain, how they were properly used.
Exactly. There's not, to my knowledge, any rules on that. We had been advising people to the extent they could to set up a separate account for those funds just to make it easier for them to track them.
And Mary, here's a safe harbor question that I think is a good one. The borrower has a reduction, but is eligible for the safe harbor by restoring the number of employees by June 30. Is June 30 still the deadline, even if the covered period expires before June 30?
Yes. Yes. So I know I said earlier there hasn't been any guidance on when you need to file your loan forgiveness application, but I would encourage, obviously, anyone who's taken advantage of the safe harbor, you're not going to want to file that before June 30.
So here's Scott, another lease question. Leases that are triple net include base rent and then other expenses. Are the other expenses eligible for forgiveness? I think it's related to the CAM question earlier. Usually those other expenses are considered additional rent in the lease, and most leases are defining then base rent and additional rent as quote unquote the rent with a capital R. So if you adopt that theory of the lease, then I think you have a good argument that your CAM or your triple net expenses are eligible. I don't know, Scott, if you have another thought.
well, the only other thought I would have is insurance may be a separate question because it's not expressly allowed. I think, as you indicated earlier, utilities certainly are, and your rent, your base rent is, but to the extent your triple net component includes an insurance payment, and taxes, I'm not sure those are necessarily forgivable, includable expenses. So somebody with a triple net lease, I think we would want to take a closer look at it. But generally, I think, yes, I mean, the consistency would say, as you indicated, rent is rent, and that's part of what you've agreed to pay to occupy the space. But SBA may see it differently, so I would want to parse that language.
Well, we are about now 10 minutes past our allotted hour. I have not been able to make it all the way through every question here, but we will have the questions afterwards and do our best to address those that we haven't been able to address more generally here. Again, the presentation will be posted on our website, and as will a copy of the video here as well, and we'll distribute a PDF as well to the participants. So thank you all again for joining us today. I would hope that this has helped to shed some light on this challenging and somewhat ever-changing topic. If you again have particular questions or would like to follow up in any way, please don't hesitate to reach out to any one of us. So thanks very much. Have a great day.
Bye, everyone.
Thank you.
Thank you.
Good day.